increases. So friends, let us see the data of Campus Activewear. So the market cap of this company is 9,200. It is a small cap company. Stock is trading at 78 price to earning multiple. It shows it is bit overvalued. This is because of the previous points discussed, that is there is high growth and there is strong moat, and there is going to be high demand as well. ROCE and ROE are very good. It is more than 20%. It is considered to be very good. Return on equity and return on capital employed, the current market price is 302. All-time high was 640 and current and all-time low was 282. So we can say that stock is almost trading closer to the all-time low price, or more than 50% discount from all-time high. The stock doesn't company doesn't pay dividend, and the debt to equity is 0.61. Any debt to equity less than 1 is ideal. 0.61 is very less debt, and as a growing company there will be debt. Pledged percentage is 0, that is very good, and sales growth is 30% almost. This is a very good parameter, and the debt is low, cash end is 24%, 24 crores. So friends, as the company got listed in 2022, this is the price chart. Initially the share of the price skyrocketed from nearly it went to 640 rupees, and then after at the end of 2022 it started crashing and the downward trend continued. So this is the price chart of the company, and this is the price to earning multiple. When the price shot up to 640, the price to earning multiple was 300 plus, which was unsustainable, and then the price to earning multiple corrected, and now it is 75, whereas EPS, earning per share, is continuously increasing. These blocks are continuously increasing. Friends, this is the quarterly result of the company. So quarterly result shows that from previous quarter the sales was 338 crores and present quarter is 354 crores. The sales has increased but not up to the market expectations. We should compare the June quarter with June quarter, and corresponding quarters of previous years with corresponding quarters of the next year. Because of seasonality, demand is seasonal, because of festive occasion, Diwali, or because of school starting occasions, etc. So but we can see that from previous years demand is continuously increasing. So with the upcoming festive season, the September quarter will be giving good result, as well as December quarter will be giving furthermore better results. That is the trend. Generally the September quarter has a better result than June quarter, and December quarter has much better return than September quarter. So hopefully the trend will continue this time also. So looking at the long term chart, this is very crucial. The sales has increased from 410 crores to 1400 crores. The profit has increased from 53 crores. Nearly it has increased more than 5 times in last 5 years. This is a very good sign for the company. The EPS has grown, and profit before tax, profit after tax, everything has grown. This shows strong fundamentals. So friends, this is the shareholding pattern. We can see that the promoters is having high stakes, 74. They have all sold very little bit, but promoters are having high stakes in the company, which is a very good sign. SEBI mandates only 75% maximum can be held by promoter, whereas here almost 74% is held by promoter. And FIIs have steadily increased their stakes from 5% to presently 11%, and DIS 6%, maintaining at 6%. So friends, one crucial thing in shareholding pattern, if you see, the shareholding pattern of public shareholding has decreased from 14% to 7%, which is a good sign. This shows that more than 93%, nearly 92-93% of the company shares are held by promoters, FII and DII, which is institutional investors for having high stakes is another very good sign in shareholding pattern. So let us see the technicals of the company. As I said, after the company got listed, because of strong moat and because of the future prospects, the share price almost tripled, nearly more than doubled in small time, in less than 1 year. But after that, it has been steadily falling in a negative trend line. The reason for this fall is rise in inflation, Ukraine-Russia war, decrease in exports, etc., etc. But now the reason for me to discuss this stock now is the present price reaction. You can see, friends, after this fall, this negative trend line has reversed and the stock is in a consolidation phase. Whenever the stock touches 295, 300, it bounces back. It is not falling below 300, and this shows the trend line has reversed. Also, friends, this is the zoomed version of the recent consolidation. Whenever the stock touches below 300, it has bounced back. So friends, I would most likely that this is the strong support, and in near term 320 is the first resistance and 376 is the first resistance. So the stock has fallen like this, negative trend has gone, now it is consolidating, and most likely in near term I don't expect much more price correction. There is only one way to go up. So once it breaks out of this 326 resistance and goes up to resistance 2, it can form a U pattern and go up. So this is good for both swing traders as well as long-term investors. And if you see from all-time high, the present share price is almost at a discount of 52%. So if the stock hits the all-time high, nearly 110% gains one investor might get. So summarizing the technical analysis, there is a likely U-shaped recovery if it breaks the near-term resistance 326, and there is strong support at 295, 300. It is 52% discounted from all-time high. The present share price is lower than 50-day moving average, 100-day moving average. RSI is favorable. It is not in overbought zone. Stock is under fear. When there is blood in market, it is the best time to buy a stock, and this shows that valuation is reasonable. So these are the points which I would say that this is the very opt time to invest for long term. Also friends, since I am saying only the positive side of this company, let me also discuss the risks associated with this company. This is a small cap company with market cap less than 10,000 crores. As we have already seen, this stock shot up from 300 to 650 in no time, in less than 1 year, and crashed from 650 to 300. So it is a highly volatile company. Small caps are volatile, so it is always better to invest with limited capital in small cap company. The company doesn't pay dividend. Generally this is not a negative point, because for a growth company they generally do not pay dividend. They invest in company for future growth. Third thing is debt to equity. Friends, market leader in Indian equity, in Indian footwear, is Relaxo Footwears. The debt of Relaxo Footwear is almost zero. Debt to equity is almost nil, zero. Whereas the campus debt to equity is 0.06. Debt to equity ratio less than 1 is good, but compared to Relaxo, it has debt, and this is natural, because for a growing small cap company it will take debt to increase the capex, increase the growth, organic and inorganic growth, and grow. So this debt is manageable and it is good. Last is, there is no relative long term chart. The chart which I have seen is only since last 2-3 years. So these are the few risks associated with the company, but overall this is a very good company for long term investment. This is only for educational purposes. This is not an investment advice. Do your own research for investment. Thank you.